Hello, oracles. Well, we've got the market seeming like it's popping like a balloon, just like the one we saw floating over the US recently. So, is Tesla going to be following suit with the rest of the market? Well, we're just going to need to be patient and wait and see how this is going to play out. So, over the last month, we have seen quite a run. Are we due for a pullback? Are we going to get it? Is this balloon popping going to be the reason we see a pullback in the stock? We'll find out in just a minute. All right, so jumping into the charts, pre market, we are up almost 0.75%, despite the fact that the entire market is red. The NASDAQ at the time of this recording is down just over 1%. So Tesla outperforming again as we open up the day and open up the week. And so the things that we are going to be paying attention to today, if we continue to run up, is going to be this $200 level. We have bounced off of it a couple of times now, just waiting to see if we can actually break through it. That is the battleground at the moment. If we can break above that, we will be looking at this 207 level. And then above that, we have 221. And so now, yesterday, I put out a video about filling gaps down below us. Some people were a little upset by it. They don't want to see this FUD coming in here. It's not FUD, folks. What I'm putting out here is from a technical analysis standpoint, these things have played themselves out in the past. We saw it all last year. When we were at 313, we came down and filled every single gap. I called the one down to 247. We actually fell significantly below that. So to think that we cannot do that again is just being ignorant, personally, in my opinion. You have to be open to that fact that we could potentially pull back. I don't want us to. Truly, I don't. But this is a reality that we need to face. But there's a good thing that we can do with all of this. Now, Melissa in the comments yesterday had made a mention about how she has been playing the stock in the swing trading manner. Now, granted, this is swing trading versus investing. For anyone out there who is just investing for the long term, buy, hold, dollar cost average, whatever the best strategy is for you for the long term. And personally, I think that following the charts for a long term investor, especially someone who is like a little guy like myself, looking for better buying opportunities, looking for a chance to buy even more for less, because the lower the stock price is, the further we can stretch our money. So you're buying it on a severe discount, whereas we would not have that opportunity otherwise because we don't have as much money to invest. So that's the real reason I follow the charts itself, is just to see, all right, are we going to get some great buying opportunities coming up? That's the way I view it. And yes, I have cash on the sidelines. I am prepared for this. This is the exact reason why I prepared for this, was because I am a little guy and I know that in order for me to have my money stretch further, I need to save up cash and I need to be patient. Not trying to time the market, but I'm going to get into what Melissa said in a minute, and it kind of explains a general strategy that could be used for kind of catching the top and bottom ish of the stock. And so, what Melissa said here is, hey, let's not fight over where Tesla factories can be. Let's have them everywhere. Can't wait for Investor Day. I can't wait either. I am trying to wait and see what we're going to be getting for timing so I could do a live stream for it. Tim, why don't you just ride trends in the stock? I knew nothing over a month ago, and my portfolio outside of Tesla, up $4,500, is up another $4,000. I just look for newest upgrades, look at the charts, buy shares, hold for a few days or whatever, watch them run up 5 to 25%, and cash out. And now, again, none of this is financial advice. And on an upswing like this, that is a great way to play it. You're protecting yourself, you're getting yourself some profits. Again, for those of us who are long term holders, selling out may not be the option. You may just want to either hold cash or buy when it comes back down again. And Melissa here is catching this nice run on the way up. Again, we're up over 80% in the last month. That's absolutely insane. So anybody who was able to catch that run and make some profits is doing well. This is what I did over in my IRA, and I'm now anticipating a potential pullback. So when you take a step back and you take, your emotions, you take specific stocks and everything out of it entirely, just look at it from a general standpoint. Stocks move in certain cyclical manners. Stocks move, especially the really good ones, move in relatively predictable manners. And while Tesla is a little more volatile and does move a bit more and doesn't always do what the stock market is doing itself, just like we're seeing today, Tesla stock itself does follow these cycles. Tesla will run up and then it will come back down. How much it runs up and how much it comes down are hard to predict. However, if you can see that, hey, we are due for a run, then those are the times where I'm buying heavier. You guys who have been following me over the last year know this. I say, hey, you know what? We're really oversold right now. I think we're due for some big buying pressure. That's usually when I add heavier because I'm anticipating we're going to be getting a run in the stock. And then when we're at points like this, where, hey, the stock is a bit overbought. Right now, the RSI is 72. So with the stock being overbought like this, sure, we may push up a little bit more, but we are due for a healthy pullback. Now, again, this isn't spreading FUD. This is actually good for the stock. This is similar to working out, and we talk about overtraining. When you push yourself too hard and don't give yourself enough rest, you end up getting hurt. This is what we saw with Tesla for the last 2 years. Tesla was going up and up and up and up and up, and it was pushing itself too hard, too fast to the point where it was getting hurt. And then a lot of people with margin ended up getting called out. We had a lot of people who were panic selling and actually losing money. So there was a lot of pain that was felt because we pushed too high and didn't give ourselves that break. This is what is naturally a good thing to do when you see the stock pushing as high as it is. Again, I love the stock long term. I think it's going to be the greatest company we could potentially invest in for at least the next 10 years. However, in the near term, it is good and healthy to take these rests and take these breaks. So then what I take a look at is what is the sentiment that could cause a pullback? What are the areas that we could pull back to? And that's my way of sort of timing the market. And it's not timing it to try and find the exact bottom, but it's timing it to say, all right, where could we potentially fall to? Sort of to give myself, a range of prices that I think would be a good buying opportunity. Gaps are one of those ways for me to find those buying opportunities. We are now overbought in the stock. I think we could push higher and stay overbought for a little bit longer before we pull back, but I think that pullback is inevitable at some point. What level do we pull back to? That question has yet to be answered. When we look at gaps, the gap below us right now that is the closest is that 146 gap. So if Tesla stock does end up popping just like the market is right now, the level I look for below us is that 146. Now, again, I've mentioned it before where it's kind of like, when you see us moving in a certain direction and we see support and resistance levels, we see that and it's like one of those, if we're trending through that and we break one of those levels, there's a good chance we will continue trending in that direction. So again, it's not a perfect science, but this is how technical analysis works. And again, as a lot of other people say, just like when it comes to astrology, the more people who follow it, the more it works. And that's really how it is. And there's a lot of people who follow it. So that's why it's one of the pieces I pay attention to when it comes to the stock movements. And so again, long term, none of it really matters. If you have enough money to invest however much you want into the stock right now, have at it. And none of this is really going to matter to you whatsoever. But if you're a little guy and you're looking to add as many shares as you possibly can, then paying attention to certain levels that we could pull down to are going to be beneficial. It's about taking your emotions out. We're now in kind of FOMO mode where a lot of people have started buying a lot of options because, hey, I don't think Tesla's going to come back down under $200 again if we get over it. Like, I want to believe that's true, but when you look at the charts and you look at what we've done all last year, and I look at the fact that I didn't think that we were going to come down below $1,000 ever again, and I look at where we are, you have to be open to the possibility that anything is possible. And so when we look at upcoming catalysts as far as positive and negative go, Investor Day is going to be a huge one. Elon has been touting this highly. We have a lot of anticipation around this. We're assuming we're going to hear something about Project Highland, which is probably that Generation 3 platform, potentially looking at the future roadmap of the company. Master Plan Part 3 type stuff is probably going to be coming out of this. Could be a lot of great stuff that we're going to get that could propel the stock forward. But in the meantime, we may get something like this balloon that's going over the US that we shot down. Now China is saying that, it's going to really interrupt the relations that we have with the US. We've got tensions in Ukraine that are still building up, whereas we thought that they were dwindling. There's a lot of global tensions that are going on right now that could potentially bring the stock market and Tesla stock itself down, despite the fact that it has nothing to do with Tesla specifically. This is just how it works. And as Clueless had mentioned in the comments, when it comes to these gaps, it's the market makers. So while I did mention that it's algorithms and computers that are doing a lot of the trading, it's the market makers that are creating this and making the stocks pull down to fill these gaps. As he had mentioned, you go to this insider trading type stuff, and you've got these big money people saying, hey, I really wanted to buy this stock at this price, but I missed out on it. So there's that gap, and then the market makers will pull the stock down to fill that gap so their buddies can then come in and buy at those prices. You want to believe it's not true, but it truly is. This is what ends up happening. This is what's been going on long before computers even came in and had algorithms playing with the stock market itself. Now, the market makers can just set a program in their computers for the algorithms to cause this to happen over time. And they can say, hey, you know what? I want this balloon situation to be a catalyst to bring the stock price down. It's just like keyword searches when you put it into Google. If you put something in, what is the first thing that pops up? Well, these market makers are doing that with their algorithms and saying, hey, this is the keyword I want you guys to trigger. When it comes out in the media, I want you to sell off based upon this keyword and what is going on. If they don't put that in there, we don't see the sell off. That's why sometimes we hear certain news one way or the other, and the stock market doesn't move the way we think it would. There's something politically that's going on that you think would pull the stock price down, and it doesn't. And then all of a sudden that there's nothing going on, and then something underlying ends up pulling the stock price down for whatever reason. Very strange, but it's not as strange as you think because it's being manipulated behind the scenes. And so I know that sounds like a lot of tinfoil hat type stuff, but it is true. This is what's going on. Jim Cramer had talked about it previously back in 2006 when he did an interview talking about how hedge funds work. Hedge funds will intentionally go and find someone within the company, and they find a friend that they have in the media. They will find something from someone in that company that they think is going to move the stock price one way or the other. Then they get with their buddy in the media. That media outlet then puts out an article discussing that specific situation, slightly embellishing it to however they want. Other news media outlets pick up on it. It now goes viral. The stock moves the direction that the hedge fund wants it to go. And then they manipulate people's emotions off of that. This is exactly how it works. And this is why it's so important to keep your emotions out. So when you see gaps like this and you emotionally don't want to feel it come down to that level, you got to take a step back and look at the bigger picture as to what is truly going on in the market. And there's a lot of stronger forces at play than just Tesla stock itself. And so to understand all of this, you can now recognize what we can potentially see for great buying opportunities down below. If we're looking at the 114 gap, let's say, and we have a lot of people saying, oh man, I wish I bought back in down at those levels, and they happen to know somebody who is a market maker, they can say, hey, I want to buy in at this level. We are going to see it pull down to that level. We can then have that opportunity to potentially buy at that level down below as well. That's the way I look at it. That's how we have seen it trade in the past. Again, not guaranteed that it is going to happen, but this is a lot of times how it plays out. And I want to be ready for that. And so, going back to Melissa's point, she has been doing this on the way up, buying, selling for a profit, and then coming out. Now, one thing to pay attention to if you are doing this in your main portfolio is make sure you're paying attention to taxes as well. Because if you are hitting that tax threshold, you have to pay taxes on that. So, is all of that buying and selling worth it for paying those taxes? It's only a question you can answer. So, you need to take a look at that as well. But if this is a strategy you want to do to make some money on this and then be able to roll that back into the stock as it's coming down, it could be a way to go. And then if you're like Melissa here and you're buying on the way up and making these profits, then you can say, hey, you know what? I think we are due for a pullback and I see these gaps down below us. Perhaps I want to save a bunch of that cash and profits that I made from the run on the way up and buy more on the way down below and then rinse and repeat. And then as we begin our next run up, do the same thing on the way back up again. Again, that is not financial advice. That's just a strategy that some people use when it comes to swing trading, and people do make good money doing this. So if you are someone who is a swing trader and you want to try this method, by all means, go right ahead and try it. And you can give us some feedback on here as to how it worked for you. For me, again, I am just saving my cash as it is. When I feel that pullback coming, I'm going to set some buying levels a little bit lower. Right now, I have a level at 125 for my IRA, and then I'm going to pay attention from there to see where we trade, to see where I want to add more as well. And now this pertains to pretty much every stock that is out there. So if Tesla is not the only stock that you trade in, this could be a viable option in other areas as well. Things move basically the same way for every company. It just moves differently based upon different information, different news, different sentiment. So you really need to pay attention to that company in particular to make sure that you're doing what is best for you and your portfolio. But generally speaking, this works for the entire stock market. And you guys can let me know in the comments below how you are playing all this. Do you think we are due for a pullback? Do you think we are going to keep running in the stock? If you think we are going to keep running, what level do you think we are going to be running to? And what do you think is going to be causing that run to continue going? Otherwise, thank you guys so much for watching. Thank you for your support. Please hit that like and subscribe button, and we will see you in the next one.